Right Path Real Estate Radio with
Hey,
Tom
Facebook
Perry.
folks.
Get the answer to your question
Hey.
that's keeping you from taking action and succeeding today.
Well, is that better?
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show. So on Friday of last week, had a few audio issues when I was on the show, and then Jason was on the show yesterday. I think we had a few more audio issues, but we've got all that fixed now as I understand it. So both on Facebook and on the terrestrial radio. So for those of you that follow us on Facebook, if you ever have a problem in the future, or if you, sometimes I know Facebook's going through some figuring on their algorithms. So some people aren't getting the notices that we used to get. So what I'd recommend to everybody is go to 95577 in your text messaging app. Just go to your text messaging app, hit 95577, text the word listen, LISTEN, and then you will get a reminder text a few minutes before our radio show goes live. And I'm joined live in the studio now with Jennifer Hernandez. She is part of the Hernandez team with Legacy Mutual Mortgage. And that's, oh, you know what? We need to pull your, see here, I'm all discombobulated. We need to put you up here. There we go.
Legacy.
Yeah, it's jennifer.legacymutual.com. That's jennifer.legacymutual.com, 713-579-3600. So you're doing a video webinar afterwards, but it's not open to all of our radio show listeners, right?
No, it's a coaching video thing that I do every other week.
But then you said you're also coming up, you said something before we got on the show that you're talking about interest rates and what they're going to do, and also flooded houses and appraisals, all that.
We've got, I'll have information next time. I've got a big lunch and learn that is sold out, so I'm not going to tell anyone where it is, because if they show up, they won't have a seat.
Yeah.
But it's on appraisals post-Harvey, so now it's from one of our very best appraisers, Initech Appraisals. They're going to be talking and giving us, I mean, we've had a full 6 months now, so things are starting to hit the market. So I'll be taking copious notes, and I'll bring that stuff to the next show in a couple weeks.
So on Friday of last week, we had one of our properties hit the market, and I'll be following up after the show with one of our retail agents, Audra, and find out, did we have any showings over the weekend, things like that. But pre-Harvey, listed for $550, and then they dropped the price to $535, and they had received an offer at $500, contingent, as a contingent offer on person selling their house in Cinco Ranch. And we bought it thinking it was going to take about a 15% hit, but we're not really seeing any evidence that it's going to be that big on a one-time flooded.
That's awesome.
Backs right up to the bio, so we put it out. Actually did more than just replacing what had been there before, removed some walls, opened up the floor plan a bit, opened up between the kitchen and the formal dining room, and between the kitchen and the formal living room. There really wasn't a way to open it up between the kitchen and the den. But really, where the formal living room could become the den, and the former den could become the formal living room. And
is that the one in the Lakeside Estates that we saw when we were on the bus tour? The one with the you walk in and there's the fireplace, and it's really tall, like 20-foot ceilings? No,
not that one. No, this is one that's you walk in and you're right into a stairwell, and then you turn to the right and there's a den area and fireplace toward the front of it. Yeah, but it's on a cul-de-sac that backs up to the bio. There's about, I think, 7 acres behind the property that's undeveloped raw land, that's just bio land and all that.
Well, that's great to hear.
And so we'll see. What I'm curious. Well, we put it right back out at $499.9.
Yeah, that would be a 10%.
It'd be zero,
drop.
no percent.
Oh, wait a minute. You said $450.
Well, here's what. It had been listed at $550.
Oh, $550.
And then they had lowered the price to $535. But just because you listed it that number doesn't mean that's what it is.
Got it.
So they had gotten an offer at $500. So pre-flood, and also the rest of the story is the people that were selling the house, they had bought the house just 3 years before the flood at $475.
Okay.
So I had felt like that it had appreciated from 475 to about 500 because they had an actual offer at 500, right?
Yeah, that's
and they didn't have an offer
great
at 535, didn't have an offer at 550, so I was kind of discounting that. You know, hey, I can list it for $1 million, doesn't mean it's worth it.
No,
right?
Of course, I just misunderstood the story. Okay, that sounds great.
So we put it right out at what they had gotten an offer at before, and we'll see. I mean, we don't have an offer yet. It's been on the market a whopping 4 days now. So, I mean, we're dying over here just waiting for an offer.
Yeah, I bet.
But you know, I bought it off of thinking it was like a 425. So anything between 450, 475, I'm good anywhere in that range. And hopefully no one's listening that's looking to buy that house because I'm tipping my hand on my negotiating.
Well,
right?
we'll get the team ready.
Yeah, right.
For if we have the buyer call to do a second opinion.
Yeah. Well.
Sure.
So, and we feel like we added value by opening it up. So we feel like whatever value may have been lost by the flood may have been made up by a more open floor plan and all those kind of things.
Mm-hmm.
But we're all we don't have any proof. We're all just kind of throwing darts, just hoping they land someplace.
You know, I wanted to switch gears a minute
Sure.
of something that was on my mind. So post Harvey, we're starting to see people's credit.
Mm-hmm.
And we're starting to see, I had a guy yesterday, and oh man, he's a veteran.
Yep.
He moved here from another state 2 days before Harvey, and he flooded out.
Mm-hmm.
And, you know, my heartstrings were pulling for this guy. So he came in the office yesterday. Credit is down on the toilet. And I figured out what he was doing. He's been doing the right thing every month. He was sending partial payments.
Oh, geez.
And he was just sending what he could. Oh, I'm going to send $100. It's less than what's due, but I'm doing the right thing. I'm just, you know, I was out of a job.
I'm treading water, right. Mm-hmm.
So what they did was they don't apply it.
No.
If it's not a full payment, they don't, the creditor's credit card, installment loan, it doesn't matter. They don't apply it to the payment. They cannot accept partial payments.
Right.
They just put it towards the balance, like as you're making an extra payment.
Right.
So his credit shows like he's 5 or 6 months delinquent, and that he's
so
not
he's
past
reducing
due.
principal, but
so it's with a credit union. I'm hoping that I gave him some coaching on what to say to them when he calls. He's got a direct contact. I said, look, call me, and if we can call a conference three-way, we can do it. But you know, we're starting to see the what's happening when even post-flood, if the creditor is not reporting correctly, we have seen where creditors are not reporting correctly and you're showing late.
Yes.
Even though you told them, look, I'm a victim of Harvey. So it's getting really tangled out there. So we're really trying to help as many people we can as to, I mean, I'll call a conference with any of them and
now,
talk.
Do you do VA loans?
Yeah,
I assume you did. Okay.
We do. VA loans actually.
So is he eligible? Because I know VA loans are, easier underwriting and all that. So I assume that's the route you're going. But even his credit.
The credit is.
Even VA has underwriting.
No, his credit's like 500.
Oh, geez.
Yeah, and it's because of these 5 and 6 months late.
Yeah.
You know,
but that's so low that if he got caught up, then it jumps. It could jump 100 points quickly, right?
We need to. Well.
But he needs probably 180.
We need to get the lates removed.
Yeah.
Like someone over there needs to be like, oh my God, we've just automated, accidentally reported all this incorrectly. Sure. So I'm hoping you can get a letter and we can update the bureaus, but we'll see. But lots of different scenarios out there. What I tell people is, look, some people are really fearful of. They know their credit might be bad, but I just say, listen, let's just see what the baseline is and let's consult you. And you might be several months or a year out, but at least we'll know. And there's so much stuff. There's so much information on the internet. So if you're a realtor, an investor, or in fact, the guy that was in my office yesterday, his neighbor listens to your show all the time. Oh, wow. And that's how he got my name. He says, oh yeah, I always hear these commercials for this mortgage lady. Call her. And so, isn't that great?
That's fantastic.
One of your listeners referred.
We have a few.
And so that's right. And so, just encourage people to get their credit baseline going. And that's the biggest step for people to take. Whether if
anybody has a question, here's what you mentioned something about the internet. Yes, there is a wealth of information on the internet. The trouble is it's too much. What the internet is lacking is real wisdom. And so who I have sitting here with me is wisdom as it relates to mortgages. So if you want a question answered where you don't have to filter through all of the information, all the what we call it noise. I mean, it's just there's
noise.
A lot of noise out there. And you can find people that say that oranges are good for you, and then people that say oranges are terrible for you. And then so how do you where's the wisdom in all of that? So you can give us a call, 713-785-1817 right now, or you can contact Jennifer at jennifer.legacymutual.com or 713-579-3600, 713-579-3600.
Awesome. And so speaking of credit,
2 minutes.
Also, we've got what I want to mention. Oh, the biggest thing I also get on credit, and these are even with investors. I've got a gal who her credit score is 650, and she's buying an investment property, and it's like a 3-point buy down because investor loans, they don't want that rate. They want a 720 plus. So we're trying to see what we can do as a rescore.
Okay.
So any rate is available. It's just very costly to do it.
So what you're saying is she's buying down her rate?
Well, I'm trying to give her other options. I'm trying to see first, like, look, here's your score.
Yep.
These are some movements that I think you can pay. If she pays down on some of the credit cards that are almost maxed out, then it might open up some points. So we're going that route first. And
you remember the credit service that's available through Right Path Financial, right? Which is Tremont.
I didn't know that.
Yes.
Oh, Tremont. Yes.
Okay.
Yeah. I didn't know the credit.
Yeah. Absolutely.
Checking service. Okay, cool. I'll check into that.
It's an improvement service where they work on cleaning it up and maximizing it as quickly as possible.
Oh, I'll have to check that out. Yeah. Okay, cool. I actually signed up this weekend for the identity guard
Fantastic.
one. Identity.
Yay.
So anyway, the truth about credit inquiries is that everybody thinks, oh, are you going to pull my credit? Is it going to be a hard inquiry? Well, yes. But if you, in a 45-day period, you can pull from 10 mortgage companies, it only counts as one pull for the points.
Yeah. And how many points is it? I mean, it's not like it's not like 100 points.
It's maybe 3 to 5 points.
Yeah,
however,
if you're in a 720 and they want a 720, that knocks you down to a 715. That's a big deal.
Well, it won't knock you down until 45 days after we pull the score. So when I pull the score today, if I'm the first person that's pulled it, you have 45 days to where it's not even going to calculate in your score.
And anybody else that pulls during that same 45 days, same thing.
It's not going to calculate.
Right.
And so your score won't change for 45 days. It's all the other things that you do in between.
Yes.
So we did a rescore on a guy, and we coached him on his credit, and he did those things. But then we did the rescore. He maxed out 3 credit cards.
Oh, my gosh.
And he got a collection in that time that we were coaching him on his score. So now he's denied because he didn't do what he didn't stop using his credit.
Listen.
Yeah, so it's all these other things that we're doing at the same time. So that's what really affects the score.
This goes back to one of our education points, is that the goal of education is not knowledge, but it's the doing. So it's you were teaching him what to do, and he didn't do it. And so what's the point of the education?
Well, we just love on all of them, and we give them all advice, and we do what we can. So.
Yeah, but there's a difference between being their cheerleader and being their coach, right? On the field, the basketball team can be doing terrible, but the cheerleaders are going, go team, but the coach is actually telling the team something totally different.
That's right.
And listeners have to decide, do they want a coach or do they want a cheerleader?
Yeah.
In fact, all people have to decide that. Who do they want in their life? Do they want coaches or cheerleaders?
Well, we want to coach everybody. So just give me a call or visit my website. You can get my email, and then give me a ring, and I'm happy to do a consult.
All right, one more time, jennifer.legacymutual.com, jennifer.legacymutual.com, 713-579-3600. Thanks for coming in.
Thanks.
Yeah.
Talk to you soon.
Yeah, sure.
Mike's off.
All right, thanks.
Hey, are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab,
We had
or
something
a rental
exciting
rehab,
happen
we
yesterday
manage every aspect of a rehab from
that
start
I
to
want to
finish
talk
with
about
a
on
highly
air for sure,
efficient,
but I'll
standardized
give you the
process.
heads up on it.
Over
while
the
you're-
last 6 years, Fast
checked
Track
out on.
has completed over 700
So
projects.
go ahead and do a
which
test
has
with
helped us
Nikki.
to create our 3 keys to success.
Hey, Nikki.
Use a detailed
Hey.
scope
Good
of
mor-
work
good
so
morning.
everything gets done.
Good morning.
Train and maintain
Turn it down a little
quality
bit, or is he
crews
good?
so
Yeah,
gets
turn it
done
down a
right.
little bit.
Okay.
And complete the work.
'Cause
in
I'm too
proper
loud.
order
No,
so it
you're
gets done
you're
right.
louder than
No more
what
management
Jennifer
than
Hernandez
you
was.
can
Yeah.
work
Yeah.
yourself.
Right.
Fast Track Remodeling really does.
So we'll talk
So
about
give
it
us
on
a
the
call
air,
today
but
at
okay, so yesterday we got a call from a title company wanted us to release a memorandum of contract, and we're like, hey, what's so we go back to our files and look at that in January we had put a property under contract for 20,
Okay.
and then the seller went dark, and then we keep trying to call and call and call. Lo and behold, some other investor bought the property, closed at Carrington Title, which doesn't exist in Houston anymore apparently.
Right.
So apparently when they opened up title, either ignored it or the underwriter missed it. And so now we're gonna
30
talk
seconds.
to our attorney yesterday, and gonna sue the seller for breach of contract, gonna sue the buyer for tortious interference, and that'll probably draw the title company in for. What's your thought? And we'll talk about it on the air.
Yeah,
I'll explain the whole story.
Yeah, absolutely.
Yeah.
That's a pretty good idea.
Yeah. So,
Cool.
or we just ask for a check for $15,000, to go away from the investor.
Actually, well,
Yeah.
and I can't tell you
Yeah.
in the air.
Yeah, sure.
This is Business 1110.
All right. Hey, Tom, I don't know if you can mention the name of the
Oh, is that right? Okay.
company.
Okay.
Yeah.
Yeah.
Okay. Here we go, guys.
Look at Nikki.
All right, guys. Hot mics, gentlemen. Hot
All
mics.
right, thank you.
Hey, welcome back. Right Path Real Estate Radio did a quick change during the break. I'm joined now with Ashley Patten. He's with Patten Law Firm, and which is also Texas American Title. So that's plfpc.com, 713-621-5808. So during the break, I was giving you a heads up. Yesterday, got a phone call from a title company that said, hey, looking for a release on this memorandum of contract. And we said, well, what's the address? Let's pull the file. So we obviously go back to the notes. Turns out we had a property under contract, and we had opened up title with you guys.
Okay.
And so we had clear to close, all that. Seller goes dark, quits communicating. You know what happens. What percentage of the time would you say when you're dealing with investors, which is a big chunk of y'all's business,
Right.
what percentage of the time would you say sellers go dark?
Probably about 5%.
I was going to guess about somewhere between 5 and 10. No higher than 10, no lower than 5.
Yeah, it's
7, 8,
typical-
9.
Right. It's typically a little bit busier, a little bit higher with investor business.
Of course, right.
Just because a lot of times you have sellers who, are very motivated sometimes.
Correct.
Sometimes they're not. Sometimes they're wishy-washy.
What I found with sellers, what will happen is, they'll invite a couple of different investors to
Right.
come in, and an investor comes in and they do a good job as a salesperson, right? They bonding rapport, they make an offer. Yeah, it's not what they wanted. Let's say we're making an offer of $50,000. Somebody else comes along and says, "Oh, I'll give you 60." Well, it's fine to do that. Nothing wrong with a seller hearing multiple offers and keeping the window of offers open as long as they want to. But the offer taking should end once a contract is signed.
Once a contract is signed, the deal's done.
The deal is done, right. And so I've had sellers tell me, well, people cancel contracts all the time. Well, that's true if both sides agree to cancel the contract.
That's right.
But if one side says, no, I don't want to cancel the contract, and the other, that's the purpose of a contract, is that you're agreeing to do certain things, right?
Yeah, and that's also the purpose of filing a memorandum of option, is to let everybody on notice that, hey, you have contractual rights to this property granted by the way of the seller.
So we contracted to buy this property. Another investor comes along. What's at issue right now, one of the questions is, because I asked the seller, I said, well, I asked the buyer, did the seller tell you that it was already under contract? Well, no, they didn't. But even if they did, I'm like, yeah, okay, all right, I know how that's going. So even if they did, it didn't show up on the schedule for the title company, right? So been advised by Nikki that I can't disclose the title company.
Well, usually when you get a telephone, as far as when a wholesaler or investor gets a telephone call from a title company asking for a release,
right?
That means the file's probably already closed.
Well, and this is a different title company now because that title company is not open anymore in Houston. So apparently what happened is title company either ignored it or the underwriter missed it.
Right.
Either case. So what we now have is two potential, talked to our attorney yesterday, we have two potential lawsuits. And one lawsuit is that we can sue the seller for breach of contract. We can also sue the buyer for tortious interference. And it's nothing personal against him. We really don't have a suit against the title company. We have a suit against the buyer, and then the buyer, in essence, has a suit against the title company, right, for either missing it or...
Well, the only way you have a suit for the buyer is if the buyer knew about the contract, and then you proceeded to go around it. Now, that's considered tortious interference contract. Now, it was created by precedent by a judge who came out one day and says, well, if he knew about a contract and still interfered with those rights, then that's considered a tortious interference, tortious being a civil wrong, a tort. Now, that all requires work, requires effort, and requires you paying attorney's fees. Personally, what I would do is I'd file a complaint. Basically either A, file a complaint with the Texas Department of Insurance, or B, start the foreclosure process of your lien. Now, what would happen at that point?
How do I have a lien?
Memorandum.
The memorandum gives me a lien.
Absolutely.
So I could start the foreclosure process.
Start the foreclosure process, which will force the title company to jump in, defend, and they will write you a check. That's the easiest way to do it. That doesn't. I mean, your attorney probably didn't tell you that because your attorney doesn't make any legal fees.
Right.
And so, why pay an attorney when you don't have to?
Right.
I mean, I'm an attorney, but I hate my brethren and sisters.
So if we start the foreclosure process enforcing the memorandum of contract, which is really the underlying lien.
That's right.
And we should we at the same time sue the seller?
You don't have to.
Okay.
You don't have to. Let the title company go after the seller. See, they will go after the seller for reimbursement, recoupment. I mean, that's what a title company is. It basically steps in the middle.
Got it.
And treat the title company like it's that. Now, more likely than not, it wasn't the underwriter that underwrote it. It was the title company who did a shoddy job at researching the file.
Got it.
So when they pulled title, they didn't see it. And because they didn't see it, they missed it. Yeah. And that's why the title company called and asked you for a release, not a payoff.
Yeah, but it's a different title company now.
Oh, of course.
Yeah.
I mean, the title company still exists.
Because now what's happening is basically what happened. We were offering to buy the property for cash, right? So we made a cash offer. Another investor came along and offered a seller finance purchase price. So let's say we were offering $50,000. Another guy comes along and offers $100,000, but it's owner finance,
right,
or seller finance. Well, the $100,000 is more, but it's just not all cash, right?
Right.
So now what he has is he has a seller finance contract, right? And he wants to refinance out. So for the refi, the title company's asking for a release of memorandum,
right?
And we're saying no.
Well, yeah, absolutely.
Either stroke us a check for $15,000, or we're going to go through, and you're suggesting a foreclosure process.
Okay, okay, I see what you're talking about. So another title company is asking for the release.
Correct.
Okay.
Yeah, not the original one.
Okay, gotcha.
Because the original title company, although they existed in Houston when all this happened.
Right.
They had offices in Dallas and Houston. Now they only have an office in Dallas and no office in Houston.
Well, they still have an underwriter. The underwriter wrote the insurance policy, and that's who you're filing a claim with.
Well, and that's the thing that a lot of people don't realize is that there's some title companies out there that they are like a Stewart Title, right? We can probably mention their name. They are the insurance company, and they are the offices and all that.
Right.
It's a little bit like a State Farm, a Farmers, an Allstate, where it's a captive agency, right?
Right.
But then there are others where, like y'all, you can probably mention y'all underwrite for who's your...
Yeah, we got 9 underwriters, Stewart being one of them.
Okay.
We use Title Resources, our main underwriter, but then we use Stewart, First American, Chicago...
Because you're using underwriter and insurance carrier as the same verbiage, right?
Well, basically, the underwriter... If you take a title policy and if you put it at 100%, the title policy is issued. You have an underwriter who gets the top 15%.
Okay.
And the underwriter is the insurance, is actually the insurance product. It's who insures the claim. So you have the underwriter, then you have the agency.
And they're typically an employee of the insurance carrier, correct?
They typically are the insurance carrier.
Okay.
So the underwriter is the insurance carrier. So they're pretty much synonymous.
Yeah.
So they take 15% of every dollar. Then you have the agent. Now, there in a side part of the agent is a fee attorney, which is what I am.
Correct.
So basically, you have the underwriter top 15%, and the other 85% is then split between the agency and/or closing attorney, fee attorney. Now, Texas is unique because most states don't have fee attorneys, but Texas, the insurance. Title insurance is considered the practice of law. It's considered legal fees.
Okay.
And so, in essence, I signed a closing services agreement with Texas American Title, which is why I'm able to do business as Texas American Title. And so, I would be an agent of Texas American Title, but we're also the agency is one and the same.
Got it.
And so, get back to your question or back to your issue is the underwriter is basically they're still in business.
Yes.
In order for an underwriter to do business in the state of Texas, they have got to have a massive level of reserves.
Right.
And TDI is the only governmental agency or the only private agency I know who exists entirely on finding their members.
Yes.
I mean, last year they didn't take a single dollar in tax fees because all they did was find their members, and their members pays for all of its costs.
Yeah, because every agent pays, every broker pays.
Right.
Yeah, and it's whether life insurance, health insurance, every single adjusters pay. I mean, all that's licensed under the Texas Department of Insurance.
Yeah, and it's heavily regulated. So if you do something wrong, I mean, that's like I said, the complaint. I tell people all the time, instead of getting attorneys involved, sometimes it's easier just to file a complaint.
Got it. So, because it's a big deal to file a complaint with. It's not like filing a complaint with the Better Business Bureau.
The Better Business Bureau. If you write a check, you can get a gold star.
Right. Yeah. Exactly right. Yeah. You can get 5 stars. Right. 5 gold stars.
That's right.
All right. So I'm joined live in the studio with Ashley Patten. He's with Patten Law Firm. It's PLFPC. That's P as in Papa, L as in Lima, F as in Foxtrot, PC.com. So PLFPC.com. 713-621-5808. 713-621-5808. So we actually, in the same day, we got 2 of those phone calls.
Really?
From 2 different files, 2 different situations. One's a refi, one's a different one. And then you remember the file that you called me on a Friday, late one night. So we actually closed on that
2
property.
minutes.
I got a call yesterday from a guy that's an investor. He apparently knew all the parties involved. He knew the lady that was selling the property. He knew the people that were living in the property.
Okay.
And just to let the listeners know what was going on, we bought a property from a lady. She and her husband had owned some investment properties. And in the divorce, she got this property. And then she turned around and sold the property on basically a contract for deed, right?
Okay, yeah.
Do you remember this?
Yeah, I do.
And what happened is the guy's renting the property, and $70 of the rent payment every month is going to pay down an agreed
the sales price, right?
The sales price,
right?
And so she wanted to sell the note. Essentially, is what she was doing. Although it's not just selling the note. She's actually selling the deed, subject to there's a restriction on the deed. It's not like a general warranty deed with no restrictions. So y'all, as a title company, y'all are saying, hey, we're warranting this deed subject to this contract that's in place. You got to honor that contract. If he ever breaks it, changes the term, but you've got to honor the contract. So we were knowingly going in. This is not for amateurs, right? This is an advance letter. So yesterday I got a call from somebody else representing the ex-husband that said, hey, he'd like to buy that that property from you.
Oh, wow.
Yeah. And I'm like, no, we're happy with the terms.
Yeah.
And what happened is that person had actually contacted the guy living in the house and kind of freaked him out about, everything's going to change. They're going to try and steal the house, which is not what we're trying to do at all. We just like the terms of the agreement.
Right.
The price that we were paying, we like the monthly payment. It's a dang good deal on a monthly payment basis.
Oh, I mean, yeah, you're buying a Sweet Harbor deal. This was like 2 weeks ago.
Yeah, absolutely. You've slept since then.
Yeah. So, yeah, that was a sweetheart deal because there was a significant amount of money left, and you were buying that note for
at a discount,
next to nothing.
Right.
Hey, congratulations. That's a sweet.
So I literally got a call yesterday from a guy that was representing the ex-husband that said that he wanted to buy that note from us and really wanted to buy it from the ex, but she didn't want to sell it to him, obviously. And so remember that the guy that was living in the house, he was all upset about it, scared that he was that we were trying to do something, and which is not at all what we were trying to do.
That's right.
So again, thanks for your help and all of that.
Oh, my pleasure.
And when you build a team of experts around you, you don't have to be an expert yourself because you trust the experts. And Ashley Patten is our expert when it comes to title issues and all of that. That's why we use Texas American Title. That's why we use Patten Law Firm, plfpc.com, 713-621-5808. The music says I'm out of time.
Tom,
thanks
for having me.
All right, appreciate it.
Bye-bye.
Mike's off.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental.
And every fourth one I think is
free. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
You found or inherited a
video audio died. Is that what? Oh no.
What to do to maximize
I can hear it. I'm listening right now.
Yeah, Brian K said video audio died.
NextGen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close
terrible.
on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract to close associate.
Anybody else, if you can hear me. Hey, good morning, Terry. Are you back?
3611, and let's talk about how we can help you on your next transaction. NMLS.
If anybody can hear me, please tell me that you can hear me.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website.
Oh, awesome.
jbfundservices.com. That's 281
All right, we're coming back.
0906.
All right.
This investment is offered to
All right.
This is Business 1110.
All right, here we go. Hot mics.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. So, here's what I've learned is that if you're not listening or learning from people that are actually doing what it is that you want to do, in other words, if I want to learn how to be a brain surgeon, we've talked about this a little bit when Jason and I were on the radio recently. If I want to learn how to be a brain surgeon, I want to learn from other brain surgeons. I don't want to learn from some guy that just claims to have read a bunch of books about brain surgery. Now he's teaching me how to do it. I want to learn from people that are actively doing it today. Real estate's no different. You want to learn from someone that is actively doing the types of deals that you want to do. Now, that being said, what I'll tell you is there's a ton of people out there that are claiming to do real estate today that haven't done real estate. Either they've never done it, which, there's people out there that have never done real estate that are teaching other people how to do real estate. And I don't know how they get away with that. But the other thing that we find is there's people that did a few deals or maybe even a lot of deals 20 years ago and then really haven't done that many deals in the last 20 years. They're not doing deals on an ongoing, consistent basis. And I get people asking all the time, hey, Tom, what about commercial or what about, fill in the blank, whatever it is that they're asking about. And what I'll tell you is right now, we feel like that the single best asset class in America is a single-family house. And the reason why is because when you're talking about single-family houses, you're talking about real estate. When you're talking about commercial, whether it's retail, whether it's industrial, whether it's strip shopping centers, which is retail, whether it's office buildings like the building that we're in right now, whether it's storage units, whether it's multifamily, all of those people get confused, are not real estate first. They are a business first that just happens to have real estate with it. Now, what I can tell you is that it is typically a much more sophisticated investor because the dollars are bigger. It is typically more sophisticated investors that are buying and selling $100 million businesses versus $5 million businesses. And then as you step up into $1 billion businesses, it's typically a more sophisticated group of attorneys and CPAs and et cetera, investors that are pulling together that kind of money and how they raise the money and all that, right? So it's a different level of sophistication than a guy buying a $50,000 rental house that he wants to sell on an owner finance. That's a different level of sophistication. Well, when you're talking about commercial, it's bought and sold on a cap rate. And cap rate is nothing more than the purchase price divided into the amount of income that it produces on an annual basis. Where people get confused in like multifamily, for example, is they say, oh, well, it's got some buildings and it's got some land, so it's real estate. I mean, there can be an argument made, but here's the analogy that I have. Think of a machine shop. If I was going to buy a machine shop that produced $1 million a year worth of income, the fact that it produces $1 million a year worth of income as a business is the primary thing that I'm buying. If I wanted to buy, let's say BP oil, it's the profit that BP can generate. It doesn't really matter, if BP had a headquarters in New York or it had a headquarter in Seattle or a headquarters in Denver. That really is irrelevant. What you're buying is the business that's producing income. And so there's cycles that businesses go through. You know, when oil is down, you buy oil companies cheaper, oil assets cheaper. When oil is up, you buy oil assets for more money. They demand more money because they're making more profit, right? So as cap rates go down, it means that you're paying more for the asset. So essentially, let's say that a machine shop's making $1 million a year of income, and you're going to pay $10 million for that. So just divide a $10 million into $1 million, and you get a 10% rate of return. So you'd make, if you pay $10 million cash for $1 million a year of profit, you'd be making a 10% rate of return, which is a 10 cap. If you paid $20 million for that, you'd be making a 5% rate of return, which is a 5 cap. So for those of y'all that have never understood cap rate before, that's cap rate in a nutshell. Well, I was watching the basketball game last night with a friend of mine, and he said, look, in the last month, I sold a commercial property for a 3.2 cap rate. Means that the people that are buying his commercial piece of property are willing to make 3.2% on their money. Well, what that means is that their cost of money has to be below 3.2. If your cost of money is 5%, you can't buy a 3.2. It means you're going in the hole 1.8% every year that you own it. Why would you do that, right? So if I have a 5% cost of money, I could buy an 8 cap, and I'm making a 3% spread on somebody else's money, assuming I make 100% I get 100% financing, right? But that's the rub. Typically in commercial deals, you don't get 100% financing unless you're doing it privately, unless somebody else is putting up the 20%, because you can't go to banks and raise that kind of money. They want skin in the game, typically 20% on commercial deals. But the machine shop also has to live someplace. It's going to sit on a piece of land. It's going to have to be in some kind of building. The fact that there's real estate involved doesn't mean that a machine shop is a real estate play. It's a business that you're buying. Same thing for multifamily. Multifamily is first and foremost a business of housing people. It generates revenue in the form of rents. But it's a business first and foremost. You're buying that cash flow. The fact that it happens to be real estate as well is just secondary, just like a machine shop. So multifamily is sold on a cap rate. As cap rates are low, prices are higher, because people are willing to take less return. So $1 million on a 5 cap is a $20 million purchase price. So if cap rates are low, prices are high. So if you're going to buy a business, whether it's a machine shop, whether it's a sign shop, whether it's a t-shirt printing business, whether it's a multifamily apartment complex, do you want to buy a business low or do you want to buy it high? And people say, I want to buy a business low. And if you want to sell a business, do you sell high or do you sell low? People say, I want to sell high. Yeah, now is a great time. The guy that I know that sold a commercial piece of property on a 3.2 cap, I mean, that's fantastic. He goes, man, I can't believe these people paid that much. I'm like, oh my gosh, what was their cost of money? He said their cost of money is 2.5%.
2 minutes.
And what you look at is there's a risk there that they're calculating their return of 0.7%. They're borrowing money at 2.5. They're making 3.2, assuming everything goes right. They can perhaps raise rents in the future as leases, renew, but what's the amount of risk that you take on for that amount of reward? So investing is not just about recalculating the reward, the return. The calculation on the investment is also what's the risk that I take on. And honestly, I wouldn't want to take on that much risk for a 0.7% return. Conversely, we get people that call us all the time. Oh, man, I just sold this big blah, 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 whatever it is, business, piece of real estate, inherited land, whatever it is. You just came into millions and millions of dollars, and now what I want to do is place that with somebody and, double my money in 3 or 4 years. And you just go, yeah, who doesn't? I mean, Warren Buffett's sitting on about $100 and something billion that is just sitting in cash because there's no place to deploy it to get significant returns. And the more money you have, the harder it is to get really large returns. And so there's not really any place that you can put a significant amount of money that you can. I mean, can you do it with $20,000 or $30,000, $40,000? Can I buy a property for $30,000, turn around and sell it for $60,000, double my money? Yeah, you can do that. Can you do that with $100 million? No, you can't, because there aren't that as you move up in prices. And so you can't do. Think about how many properties it takes to do $100 million at $20,000 at a time, and then you start adding the overhead and the structure it takes to do that, in your lifetime. and it can be done. So you're listening to Right Path Real Estate Radio, 713-785-1817. If you want to call in and ask any questions, I've got 4 more minutes on the other side of the break. Stay tuned.
Mike's off.
You found or inherited a great investment property.
So 4 minutes?
The problem is you don't know how much it's worth or
Yes,
more
4 minutes.
importantly,
All right,
what
see you
to
then.
do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for
Brian, yes,
optimum
that's who I would
protection, we
recommend as
provide
Benchmark.
guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more.
That's who we use,
Download
and then
our free ebook,
even
The Invisible
recently
Investor
Fast Track changed
Strategy,
their
today at
general liability for
AndersonAdvisors.com,
their construction
or call
business
for a free
to
risk
Benchmark.
reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more
And
of what
let's
you
see,
earn.
if you want their
Call us today at
info, it's
800-706-4741
281-569-4353.
and mention Right Path Real Estate.
Put that in here.
Are small returns getting in the
30
way of your
seconds.
retirement plans? Why settle for mediocre results? There's a better place to invest.
I didn't go into
The experts agree.
281.
Single-family real estate is one of the best investments you can make.
569,
Find out how JB Fund
4353.
Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Hot mics.
All right, welcome back. Right Path Real Estate Radio, 713-785-1817. So some people say, hey, I've been listening to you a long time. Funny, I'll be at an event on Wednesday night at Redneck Country Club. It's the super investor meeting in Houston. There'll probably be 700 other people there. I was asked by somebody from up in Dallas, said, hey, will the attendance be down because of the Rockets game? And I said, hey, money doesn't sleep. I don't think that'll have an effect. I think there'll still be 700 or 800 people there, some of the most active real estate investors. One of the things that we're going to do, Most people are stuck in their real estate business. In fact, I'm going to get up on stage. I'm going to ask this question from the stage. I'm going to say, who here today was here last month? I'm going to wait for people to raise their hands. I'm going to say, how many of you people that are raising your hand that were here last month are in the exact same spot this month that you were in last month in your business because you're stuck someplace and you don't know how to get from where you are to where you want to be? And then if you had one question to get answered to get you unstuck, Jason and I are going to do 3 10-minute personal consultations for free. You can try talking us down on that, but you won't have much success. So Jason and I, between about 8 and 8:30, are going to schedule 3 10-minute appointments. Don't need the backstory. Don't need all that. Just need what's going on right now, where you're trying to get to, and we will tell you what it is that's got you stuck. The world is full of information. It is lacking wisdom. You gain wisdom by doing. Jason and I have bought, fixed, and flipped over 450 houses in the last 4.5 years. Real wisdom comes with how to build a business by doing the business.
2 minutes.
What I'll tell you is you want to come to the event on Wednesday night, but more importantly, we're going to give a first quarter market update at a free event that's going to happen on Thursday. This Thursday, it's going to happen at the Crown Plaza across from IKEA. It's called the Galleria Crown Plaza. It's on I-10. Go to rightpathrealestate.com. That's rightpathrealestate.com. Register for that free event. We also have the last weekend retreat that we're going to do as a 3-day pathway to income and wealth and real estate workshop. It is the last time we will ever do it for $197. It is going to be all day Friday, all day Saturday, all day Sunday. Somebody called me yesterday through our main number, which does not show me caller ID. And I was juggling about 3 different other phone calls all at the end of the day. And so I wasn't able to. He was calling up saying, is this really going to be your last 3-day weekend retreat? Yes, absolutely. It's the last 3-day weekend retreat that we're going to do. It's going to be all day Friday, all day Saturday, all day Sunday. It's going to be Jason and I for all 3 of those days. The low price of $197. If you want to come to that event, the last one that we're ever going to have, you need to email support@rightpathrealestate.com. Support@rightpathrealestate.com.
30 seconds.
It is not free to go to, but I guarantee you we're going to make you this offer. It's a 100% money-back guarantee. Come to All Day Friday. If you don't feel like that you have made double or triple your money that you have in it on just the first day, we'll give you a complete refund. We're that confident that it is chock full of all the information that you are seeking right now and how to get from where you are to where you want to be in real estate. Thanks for listening, guys. Jason and I will be in the studio tomorrow. Thanks for listening.
All right, have a good one.
Thanks, you too. Bye-bye.